commodity prices falling everywhere. I don't think it's going to be a severe recession, John, but I think that we are in one of the most unique, unusual recessions with unemployment 3.6% and a strong labor market, yet demand and inflation is eating away at the purchasing power of the consumer.
We're going to hit peak inflation, Kevin. Have we?
Well, we haven't yet, particularly if this Build Back Better bill prints another $400 to $600 billion and flushes it right into the economy. That's probably not going to be a good outcome for inflation because it's very inflationary, even though it's trying to be labeled as an anti-inflation bill. Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now because it's never happened before. You've got a situation of full employment that's like 3.4%, and yet at the same time a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours. Maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been job owning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here. So he's data dependent. We've never seen this before. Never in the history of the economy in 200+ years has this ever occurred. So again, another sign that is not fitting with what everybody wants towards this recession, maybe.
Okay, and you say towards this recession. So I know there's a debate out there of whether we're in it or not. I'm assuming for you, we're not in it yet?
Well, the narrative towards the soft landing has changed so much in the last 8 weeks because just 2 months ago, nobody thought Powell could engineer anything like this. Yeah. And here we are. It's very hard to call this a recession when you've got full employment. And so is this working? So at least 50% of the pundits or the market now believes a soft landing is possible. And again, a lesson learned for everybody who thinks they can time the market is, look what happened in July. You've got maybe half of this year's returns came in 4 days. And so if you weren't in the market, you didn't capture that upside. And so it's impossible to time the market. You would have never guessed July would have been a good month, but it was.
Jerome Powell, the Federal Reserve Chairman, disagrees with economists that money supply does not cause inflation. Kevin O'Leary points this out to be wrong economics, because the move to tighten the screws on inflation using the anti-inflation bill that had just been signed into law would actually be counterproductive. There would be need to print billions of dollars to fund this act, thereby devaluing the dollar. This is not the first time Jerome Powell had been wrong. It can be recalled that in February he claimed the growth of M2 had no tangible implication on the general economics, but how wrong he was. We have since seen inflation rise from 1.7% to the astronomical height of 7.5%. Kevin says that this is the most paradoxical economic situation the U.S. has ever experienced. Usually employment drops as GDP declines. Instead, we have seen a resurgence in employment, and this makes him wonder how productive the workforce is. Because of this, it's impossible to say the United States is in a recession. Kevin disagrees with the financial pundits and says that we are not yet in a recession. He also pointed out the fact that many financial experts were busy predicting economic gloom, that they did not even see the market resurgence that came in July. You can check out our videos with experts such as Cathie Wood, Michael Saylor, and a host of others as they react to the economic situation and make predictions on the future of the market.
Help us decipher this, because like you said, we're getting this relief rally, but is it giving us a false sense of optimism, of hope? What's the truth?
Well, the truth is in the earnings. And so far, everybody was waiting to see earnings completely blow up. Didn't happen. Many companies delivered, even the highly speculative tech companies, and we're more than halfway through earnings season, and it looks pretty good. Now, it's not as good as it was a year ago, but it's nowhere near as bad as everybody was forecasting that we would be in the height of a recession right now, and we're not. And so this is a very difficult time to make a decision between fixed income and equities because, as you mentioned earlier in the show, we've got an inverted yield curve that's generally never good. But again, when you can't tell me why we have full employment, 2.5 more million people working, and low productivity, then maybe you want to be a little careful about making more decisions about raising rates or changing policy or raising taxes. They all sound like really bad ideas until you've really figured out the riddle of what's going on in this economy. We don't know.
Exactly.
So
exactly.
My attitude is to stay long equities, continue at a 30% weighting in fixed income. That's very low for me. Usually it's 50%. And just wait and see what happens. My names are high quality names that provide cash flow and distributions. But it doesn't matter what sector you pick. You've been doing quite well in the last 4 weeks.
Stick to your holdings, Kevin. What's been your personal strategy with the cryptos, with this down period we're in? Have you been adding to your position? Have you stopped? Are you good with what you have? What's your take?
No, we took a hit. We were at 20, and then it grew up to 23%. Then it went down to 16% of the portfolio. I mean, it was really volatile. But I've always said, you're going to get this volatility in an industry that's not regulated because there's no institutional bid. So probably at the low, we're at 15%. We lost, 40% of the value. And now we've come back up on some projects, and they haven't all come back at the same pace. The big players, the big market cap names like Bitcoin, like Ethereum, like Solana, like Polygon, HBAR, in some cases we doubled down. We took advantage of the extreme volatility in the large cap names like ETH and like Bitcoin. Why not add to the position if you're going to stay long? But, everybody trying to manage this space, I don't care who you are, if you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up. If you'd own these positions for more than 2 years, you're basically in a break-even situation. So this asset class is not correlated with anything, as people thought. It's not correlated with inflation yet, but the real problem, and every time you and I talk about this, it's really a gauge on where the institutional buyer is. And right now, zero. They have no Bitcoin. Anybody that tells you the institutions, the sovereigns own it, is full of poo-poo.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.